There was a lot of pushback to having the book written at all. And I listened to you say in an interview recently how you'd since lost your sources at RenTech since 2021. So how did Jim, RenTech, and the key players take it after being published?
So some were fine with the book. I met Peter Brown, who's the current CEO, at an event, and I went up to him afterwards, and he kind of turned pale and sort of nervous and awkward, and it was weird interaction. So he didn't seem to like it. But Jim was fine with the book afterwards. At first, I knew he had a couple issues with it, but then he seemed to get over them. So I've seen him. I saw him at a few events. He passed away, sadly, earlier this year. But by the end, we had a good relationship, and he seemed fine with the book. So that was good.
What were the reasons that they didn't really like that it was published?
Well, part of it is just their inherent secrecy, their inherent need, or that what they feel is a need for secrecy. That's just part of who they are, part and parcel, their nature. Because they've got what they think is a really successful and money-making system, and they don't want any hint of it getting out, any details whatsoever. And their big whole thing is, why they don't raise money. They have these outside funds, but it's not a real big focus of the firm. That they're already wealthy. They want to keep getting even wealthier. Why do they want to be written about, even if that something gets out? So they don't like to be talking to other people. And there's not inherently extrovert people. They don't like the attention. They don't go on CNBC and all that kind of stuff. So yeah, they didn't want. The last thing they wanted was a book about them.
And they're signing lifelong NDAs to join the firm. How much of that was a hurdle for you to get around, just to find sources at all?
It was awful. I still have nightmares thinking about writing that book. It was really difficult. So listen, it's chronological in nature, the book. So I started off talking to people about the early days and getting a lot of really good stuff. And that gave me encouragement, made me optimistic I could actually write this book. But for a long time, I wouldn't even cash the advance I got because I wanted the ability to give it back. And then slowly, because even when I was getting really good stuff about the early days and even in the middle period of Renaissance existence, I was like, why would anyone buy this book if I can't tell you what's going on today? And I can't. And why would someone who works there today talk to me? I mean, there's no upside. There's only downside. You could lose your job at the most successful hedge fund in history. So that gave me nightmares. Yeah, you're bringing back a little period. Yeah.
All right, well, just to make it even worse, how much do you lament the fact that people were disappointed that you didn't get these key secrets to the algorithm and exactly how they're doing it?
So it's funny. The reactions were largely positive to the book. It's done nicely. People have reached out and reviews are good, etc. But yeah, there's a segment of the readership that's like, Greg, I want the formula. You didn't give me the formula. You didn't let me make millions or even billions. How do I read a book about how the man who solved the market without tell me the formula is how he did it? Part of it I do regret, and I was going to do this for a paperback, but we just haven't done a paperback yet. It's in the book. All the secrets are in the book. There are a series of things. There are a good 20 or so of them that make them unique as a firm, that they do better than everybody else. They have their advantages, etc. I just don't lay it all out for people. You have to kind of pick them up here and there along the way. And I do regret that I should have kind of had an appendix where here, Simon's Secrets kind of thing. When he passed away, I did do a story for the Journal, which distilled it into a few of them. So I've heard from like I heard secondhand Steve Cohen, the SAC or Quite 72 fund managers, like, why this book didn't give me the formula? I want the formula. But most senior people get there's not going to be and the point is also, even if there was a formula, it's valid today, but it won't be tomorrow. So what's the point of even having it in there? So instead, I focus on their approach and how they built the firm and what they do differently and how they hire and the leverage and all things which I think are a series of advantages that they have.
Like you said, potentially for a paperback edition down the line, but laying out a few of the key things that make them so exceptional as a firm. I thought Acquired did a terrific job at pretty much exactly that.
Yes, the acquired podcast did a nice job. It was a lot of it sourced, and that they were kind to do so from the book. So, right, that underscores that point. It's in the book, but you kind of have to kind of underline along the way and pick it out. And also, I think I wrote it as a narrative, so I wanted it to be enjoyable for people. But there are others who kind of don't have patience for narratives. They just want the list of how they can make money at home. Do this at home kind of thing. So,
are you allergic to some type of, whether it's a long form article or another book, 10 steps to invest like RenTech?
Yes. You know why? Because I don't think it'll be fair to the reader, because the average person, you've been thinking twice about it. If anything, the lesson from the RenTech experience is to go the opposite direction. They're short term. They're not high frequency, but they're medium term frequency. Seconds to seasons is what they say that their holding period is, which I think is more or less accurate. So I think the lesson for the average person is don't do this at home. Don't try to be like Ren. Well, I don't think so. I wouldn't feel comfortable. Yeah, could I sell some copies? Sure. But I don't think it'd be appropriate to teach you how to invest with them. There are some principles and lessons for sure, but management, I mean, my book's as much a management book as it is a trading investing book. So there are all kinds of those lessons that I'd be comfortable sharing with people. Yeah.
I just imagine, I think something super cool about the way that they've decided to create this company and is the acquisition, the cleaning, and then the analysis of the most obscure data sets, right, that you wouldn't actually think are relevant. And so I just wonder if you ever observed or coaxed out of Jim something extremely obscure, seemingly irrelevant, that might be interesting to know about.
It's a good question. So in terms of observing, they wouldn't let me come close to the firm itself. I've driven by there. I've been around the block in the area and met people who work at the firm and got close. But the only time I got inside the sanctuary, as it were, was Jim's office, but that's in New York. And that's he does philanthropy there. And this was before he passed away, obviously. And he managed the firm from there to some extent. So, yeah, and what I observed there, well, I had to, deal with all the smoke in my face. I mean, the guy was a chain smoker to the end, more or less. He's a fascinating guy, he was just unique. In this day and age, to be chain smoking inside an office building, well, then he's Jim Simon, so no one's going to tell him to stop. So, yeah, that kind of what jumps out at you when you meet him the most.
Mm-hmm. But you never, in some side comments, casually in conversation, they mentioned, oh yeah, we just acquired, the price of salt in Sweden to de-ice the sidewalks. It was a really hard data set to get. Just something like this that would give you an instance for the impossibly large mountain of data that they're putting into these various models.
No, I didn't. The only thing that people emphasized with me, people who've worked there in the past, people who work there today, is that, Greg, if you can think of a data set, we've purchased it and we've tested it already. So there's just no potential data set that they haven't thought about or looked at or acquired.
And no sense you could get for what their cost of data was, how much they were spending on it, and where they were even getting it from? Like, who are the people out there sourcing it?
Yeah, it's an unlimited budget. Listen, their ability to obtain data, but as you note, clean it, for a long, long time distinguished them. They had data going back centuries. And the way I kind of look at it is, let's say you wanted to build a library. How long would it take you? I don't know, a few months to buy everything you need for the library. But what if you wanted to build the Library of Congress here in Washington? There's rare stuff that you can't purchase, and that they do have stuff that goes back centuries. But it gives them an advantage, but it's not as big of an advantage as it used to be. But the cleaning, they were early on, and frankly, that wasn't Jim. That was Stanford Strauss, and he kind of said, well, geez, what's with this aberration? What's with this data? It looks odd. Let's check it out. So a lot of his success, Jim's success, was thanks to others and through good fortune. Doesn't take away anything from his accomplishment, but they stumbled into some of it.
Yeah, that's a great point. I asked several former guests in anticipation of speaking to you, what was something that stood out to them for the book, or what was something they would love to know from Greg. And one of them was Victor Haghani, who was one of the co-founders of Long-Term Capital Management. And he said, the same point. Like, put the emphasis on some of the other guys, because Jim Simons takes all the air out of the room because he's such a charismatic guy, rode his bike down through to Colombia, had a carpet business, and ends up becoming this, force billionaire philanthropist, everything else. But around him, there's just a bunch of tens as well, seemingly.
Yeah. So listen, my book is titled The Man Who Solved the Market, but it's a little bit misleading, and people have noted that too. It's just a good title. Half the book is about others who Jim surrounded himself with. Now, Jim gets a lot of credit for that because he identified talent really well, got them to work together, which is one of his skill sets, genius, I would say, even. Created the incentive so that they would be encouraged to work together. So that's kind of why I'm not uncomfortable with the title. But yeah, half the book is about others, and Jim would be a successful manager were it not for these other people, but wouldn't be the greatest investor / trader, moneymaker Wall Street has ever seen. No.
In as layman language as possible, what are these PhD mathematicians doing?
So it's interesting. On the one hand, their work, their academic work, I could never understand. I can understand, I could have a vague sense of it, but I can't tell you what they did back at Stanford or wherever they came from in physics and such. When it comes to Renaissance, it's actually a little more simple in some ways. It depends who they are there. Some are, frankly, looking for data sets and testing data sets. It's a little bit beneath them, and yet it's a challenge. So some of them are collecting data. Some of them are analyzing the data. Some are looking at signals, testing signals. So in other words, I don't know, for whatever reason, a lot of what they do is relationships between investments. So they've identified some odd quirk that on Tuesday afternoons, these two chairs seem to, for whatever reason, go in opposite directions. You and I would say, seems random, seems like luck to me. They will test that. So you'll have some really accomplished physicist, astronomer, not astrologer, astronomer, kind of test that stuff. And you say to yourself, well, really? I don't know. They were doing groundbreaking stuff in academia, and now they're testing a potential new signal that will add, incrementally to their overall system. And yet they find it challenging enough. Partly it's the money you can make, but there's an intellectual challenge involved in there as well. And they'll come up with incremental ways to improve their system. And that's a big accomplishment for them.
So they find the quirk. On Tuesday afternoon, these two companies move apart. Does the only thing that matter to them is identifying this quirk exists? Or is it super important that they understand why it's happening as well?
So I wouldn't say it's super important to them. They will put some money on the signal even before they understand why it's happening. They call them non-intuitive signals. And as long as it happens enough to be mathematically reliable, and they've determined that it's not random, and yeah, you need mathematicians to figure it out.
Yeah.
They will put some money into it. But then, yeah, the super smart individuals scientists, mathematicians will try to figure out, well, why is it happening? So it's not something they're uninterested in. They do want to know. They can put more money into it once they figure that out.
Does mathematically reliable just mean more than 50% of the time?
I'm not sure. However they determine it, I wish I knew.
It took over a decade before Jim was killing it. From leaving academia to having something undeniable in the Millennium Fund. There's pretty much a decade in between then. Is that timeline correct, more or less?
Yeah, although it's Medallion Fund. Millennium Fund is another very successful hedge.
Yeah.
Medallion Fund, yeah.
Thank you.
Yeah. It took longer. I would say even longer. Yeah, in the late 70s, they started this fund. And by the early 90s, they had succeeded in commodities, fixed income, currencies, but not yet equities.
So maybe even 2.5 decades before he's undeniable, basically.
Yeah.
Did you ever speak to him about regret, a feeling of opportunity cost, and maybe even a resentment about the decisions that he'd made in his life to get to this point? Or was he just forever confident, backing himself, it's all going to figure itself out?
I think the way I would answer that is he was hedging his bets to some extent, which makes him to the hedge fund manager, meaning that he was doing other things at the same time. He called his firm Renaissance Technologies, which sort of sounds like a VC firm because he was doing a lot of VC investing and he was pretty good at it, frankly. So let's say the late 80s, even around 1990, he still wasn't sure if this trading thing was going to work. And again, he left academia in the late 70s to start it. So he was still figuring out whether this is what he should be focused on and whether it would work. And he had people, smart people, going all out doing the trading stuff, but he hedged his bets with other kind of endeavors.
But I get that he's hedging his bets, but for such a ambitious and previously high status, successful person within academia, and even before that, people always liked him, people always looked up to him, and he was always performing really, really highly. Even though he's hedging his bets this whole time, I just imagine there is a lot of feeling of resentment for some of the decisions I've made, that I'm at this point in my life and I'm in my late 30s, early 40s. Did you ever get anything out of him, a little bit softer like that?
No, I don't think there's any regret, because he had accomplished a lot in academia. He knew he could always go back to it, which he did later in life. He was making money, and you got to remember, he loved money. The guy loved making money. He was an academic. He loved mathematics, but he also just, his whole life was consumed. He liked making money, for good or for bad,
Right.
critical or not. And he ended up doing interesting things with it. But the guy wanted to be wealthy, and he was. So, yeah. So why would he regret it? They weren't making as much as they could be making. Yeah, but eventually they did get that. He was still doing his VC stuff on the side and making money there. And the opportunity cost wasn't so high. What was the opportunity cost? His more exploits in mathematics. He already had done that. He already accomplished that.
Really? Okay. I'm just imagining for him, for such a supremely ambitious person, there still would have been a great sense of opportunity cost. What could I have done in the last 10 years in academia had I just stayed there and focused on it and stayed with these incredible people?
In academia, yeah, but he really goes down. I mean, he stopped doing geometry, but he's already one of the greatest geometers over the last couple hundred years. So could he? And also, he was getting a little bored and frustrated. There was a problem he couldn't really figure out in academia. He needed a break. I never got that sense of any regret.
Was he always money hungry? Something that he strived to have, even?
Yeah, yeah, his whole life. Yeah, I mean, he was trading while he was doing academia. He was investing on the side. He was backing some friends with their ideas. He was really a unique individual. He was an academic. He was a mathematician. He was a quant, and yet he could talk to you. He drank. He smoked. He had a sense of humor. He was actually interested in others, unlike most people I write about who really don't care about anybody but themselves. He did have an interest. So he was quite the unique individual.
So the criticism he received from his academic colleagues, how could you go and soil yourself for something as dirty as money and use these talents there? Was that just water off a duck's back? He didn't give a crap?
Yeah, it was. He's very self-assured, self-confident, happy with what he was doing. Listen, he's not infallible, and he's not a saint. He's gone through marriages and a marriage, and didn't always treat people perfectly, but he had a lot of really admirable qualities. Among them, he knew what he enjoyed doing. He was intellectually challenged. That was a big goal of his. And so even when they weren't succeeding necessarily, or weren't as successful as they eventually were, he was still being intellectually challenged every day, which was one of his goals in life. So, yeah, he didn't care what the academics thought about him, really.
You've mentioned a number of times, and it's a perennial theme in the book, but he was such a good eye for talent, recruiter of talent, nurturer of talent, etc. But there was a lot of difficulty recruiting people out of academia into what he was doing in the early days. Is there something kind of a bit slimy here, that deep down these guys also just really wanted to make a lot of money? And so even though they could front that, why would you waste your talents doing something like money? But then Jim shows them, I've actually got a plan that might make us a lot of money. That ends up being the reason they go over. Or is there something a little bit more highbrow, the intellectual, the team, the sportsmanship of it, etc., that maybe brought him over?
So for most of these mathematicians and scientists, they didn't join Renaissance for the money, or at least that wasn't the primary motivation. Usually it was maybe some frustration with academia. It takes forever to publish in the world of academics. So here you could create something, you could find some improvement, some solution, and right away see it in action. There was the intellectual challenge. There's the fact that you're working with really super smart people, colleagues, and they push each other. But once they got there and started getting paid a lot, it's hard to turn that money down.
Yeah.
You get addicted to it. And that's what I saw. It's not to say some people didn't need the money and join, but that wasn't the primary motivation, my understanding.
And it also feels like I'm quite envious of the sort of life and work setup that they ended up having, so much security, so much isolation. It almost reads like it's a university campus of sorts, but these guys happen to, just make shitloads of money and don't have to deal with.
The only catch is you don't publish, so there's no recognition of you whatsoever. You got to be okay with being anonymous and being far out in Long Island and slaving away at stuff that you can't even explain.
Right. Can't tell the world about.
You can't tell anybody about. You can't tell anybody. You're restricted from it. So those of us who are in the public eye to some extent, media and such, it's like writing and writing and writing, doing really good work, and yet only the people around you, just a handful of people, recognize it. So you got to be comfortable with that. But, you get rewarded for that, and you don't have to do it your whole life. You go back into academia afterwards, which is what a lot of people do, and publish again.
Do you suspect that there's loads of academic ideas worth publishing that RenTech have discovered over the years, but simply to protect their IP or whatever you would call their intellectual property, I think that's what it is, they can't really expose that to the market, and therefore there could be a number of some of the best mathematicians in the world there that could be doing incredible stuff in sciences, but it's all sort of locked into this box of the RenTech NDA?
It's a good question. No one's ever asked me that before. I bet you there might be some of that, but it's mostly how to make more money in the market. You can publish academic papers related to that. One thing I did explore with him and others is just this talent drain. Here you are hiring away all these super smart people from other areas. They could be curing cancer for all we know. Talk about opportunity cost. That's what gets me so kind of frustrated and sad in some ways. Not just Renaissance and Jim, but all these firms that lure away talent. And what's the goal? It's just to make a few extra percentage points. And it's a zero-sum game to some extent, so other people are losing as a result. So, wow, what if all these people, Renaissance scientists, mathematicians, what if they had focused on curing cancer? They'll counter that by saying, Greg, I can't cure cancer. I'm a physicist or what have you, or astronomer. So, yeah, we'd love to cure cancer, but that's not.
But there's a lot of the great ambitions than just curing cancer.
Right. And then they'll say, well, I'm making a ton of money and eventually I'm going to give it away. And a lot of them do. They do good things with it. So that's their counter argument.
Yeah. I was going to leave this to later, but it seems like the right time to bring it up because in the execution of the Medallion Fund and whatever they're doing inside of there, presumably they've unlocked a lot of interesting threads that hold society together, move society in certain directions, etc. And the outcome of it for them is to make shitloads of money. But could there also be some deep value to society in what they've uncovered in some senses? We can't know because we don't see on the inside. But, I just wonder ethically how they might think about that if that ever came up in any conversations you had.
Well, that has not come up. It's an interesting theory. I'm a little skeptical. They've uncovered any secrets of the universe or how it
doesn't have to be a secret to the universe. It could be some deep insight into immigration policy for one particular country. They happen to find something really good here, but it's locked away in that box.
Yeah, it could be. The only time I did push them is on the Bernie Madoff situation where they, and Jim specifically, they were investing with Madoff and became suspicious and pull their money out. And I kind of thought, and not just Jim and Renaissance, but others too, there were a lot of people who pulled out of Madoff before it collapsed in a Ponzi scheme, the biggest ever. Well, don't you have an ethical obligation to share your information with others, or your observations, your conclusions about them being a fraudulently run organization? And the way they always push back is, well, we weren't sure, Greg. And what would we have done? We would have told the SEC, and look, Harry Markopoulos did tell the SEC, and no one cared. So nothing would have happened anyway, Greg, had we warned others. But That doesn't hold that much. You got to try. No, I don't know. But they said we weren't sure he was running a Ponzi scheme.
I mean, the just hearing it now, I mean, that seems to hold a little bit of weight, unless you can definitively 100% say this is definitely a fraud. You're exposing yourself to a lot of downside by calling someone a fraud when they're not a fraud. Obviously, Bernie Madoff ended up being quite the fraud, but
yeah, okay, but you could not even anonymously. You privately,
right. Or they call Greg Zuckerman and say, "Hey man,"
right?
Or they call Greg Zuckerman and say, "Hey man."
You could tip off a journalist, but again, the kind of argument is people did tell the SEC and they didn't do anything. So who knows what would have happened? Right. You got to try though. You got to try.
So I interrupted you before. I'm sorry. But you were saying you once did have. I interrupted you when you were saying they weren't going to uncover some secret of the universe or something like that. I just wonder if there was a thread that was unpulled there.
No, I hadn't really considered it. I doubt they have these deep secrets, but now I'm curious. Yeah, now I kind of I should have asked those kind of questions. Yeah, I didn't ask them about that.
I have heard in interviews, and it also reads this way in the book, but you have a great admiration for how most of these guys sort of had this huge second wind post 50, something like that. You know, at a time when a lot of the assumption is, at least, you know, life is now slowing down, we're on the decline, we're making way for the next generation. But just tell me if this is correct or not, but I feel like you have a deep admiration for someone who is just not giving up, and they're happy to risk it all and even change career completely post 50, post everything else that you've ever done.
It's a great observation. A lot of my work revolves around older men, it seems like, for whatever reason. I'd love to write about older women as well, but older men, many of whom had mediocre or unsuccessful or frustrating careers, who finally break through later in life. And I do love that theme. I'm thinking of all the books I've written. Time and time again, you have these individuals who achieve greatness, as it were, later in life. And yeah, I love that theme. It gives us all hope. It shows maybe, I love the ups and downs and the arc of life. I love reading. And now I'm writing obituaries, and people even at the journal, they're like, "Oh, sorry, you have to." No, I love writing these stories, and I love learning from these characters. Yeah, and just what they've overcome, the challenges and the obstacles, and the fact that it takes a long time sometimes to break through. And I love these people that just believed in their approach, and be it Jim or this guy Harold Hamm, who changed the Americans' energy revolution. He doesn't like me. He was a key character of a book I wrote, and he got really upset at me afterwards and started insulting me. But I don't care. I have an eminence for the guy who spent decades. He believed that America could produce a lot of oil. No one else did, and very few people did, etc. And he persevered. And yeah, you're completely right. I love that perseverance, that trait, and that self-confidence. And part of it is I want to learn from these people. So I don't necessarily have that kind of self-confidence. I believe in myself, but not nearly as much as the people I write about.
Yeah, I sometimes think about, like, what would it take to have that much belief in yourself in the face of every signal saying you're wrong, it's not going to work out, you're going to be another one of these failures down the line. And I'm totally with you on that. It gives me, if nothing else, just a little bit more optimism about a path that I might be taking. I'm not doing anything as, grand as what maybe Jim Simons is, or what was it, Harry Hamm. He's the fracking guy, right? But I think of a guy like, along those lines, is someone like Elon Musk, who is a really divisive character for a lot of very obvious reasons. But you can't not read his book by Walter Isaacson and just think, fuck me. You can't help but just sit back and admire the balls, the total 100% certainty you're doing the right thing when every single signal around you is telling you the opposite.
Yeah. So I did a book about the COVID vaccines, how they were developed. And it was just stunning to me how many scientists, researchers devoted their life to mRNA, the backbone of these COVID vaccines that saved us all. And they spent decades on it. When people mocked them, they dismissed the approach. Don't use mRNA. There are all kinds of good reasons why it shouldn't have worked, why it's unstable, the molecule, et cetera, and they persevered. Now, the only counter argument to my approach and the kind of this theme and and my embrace of this theme is that, well, Greg, you write about this. It's a self-selecting group. You write about the winners. But for every Harold Hamm or Jim Simons or Drew Weissman, mRNA guy, there are 100 other guys who believed just as much in themselves, and they failed in the end. And we don't hear from them, and they don't go down in history. And I'm partial to that argument. I understand that argument. Yeah, I don't want to encourage everybody to ignore the experts and go and do what they want to do, but I admire those who can do it. And
that's the risk of the greatness and the risk of saying fuck you when everyone is saying no, you're doing the wrong thing. There is the most likely outcome is you will be forgotten and ridiculed, and the history will move on. But
yeah,
Simons, if you're Harry Hamm, you have books written about you.
Yeah, by me. And then the fascinating thing is, so I write about finance mostly. I write about Wall Street a lot. And Wall Street's such big talkers about being contrarian and going off on your own direction and just ignoring the masses, etc. Truth be told, for those in the world of finance, but it's true of other industries too, the safe bet is just to kind of go along and do fine, get your little piece of the pie, small piece as it were, but not to be too ambitious, not to ignore, and to go along with the masses, and not to ignore the experts. So one more reason why I admire those who ignore it all and buck the consensus, but it's not the sanest approach to life. Better to, like with the 2008 financial crisis I've written about, I wrote a book about that, the people within, let's say, a bank who said, guys, there's Armageddon coming. There's going to be a 100-year flood, and there's going to be a collapse of the financial system and the housing market. Even when they were right, they were wrong, meaning, okay, fine, they were right. They made some money, let's say, for their trading desk, whatever. But everybody else in the bank, it lost money. So you didn't get a bonus. You didn't get rewarded. You didn't get much appreciation. It didn't really help you that much. Better to go along with the flow if you want like a successful long career. So it's difficult to ignore the experts and the conventional wisdom.
Totally. Just to round out the theme of people above 50 sort of redefining their lives and doing something great. Someone who may be on your radar, I'm not sure. He's not in finance, unfortunately, so I don't know if you can spin a story about him, but if you could, I think it'd be incredible. He's a guy called Jack Weatherford. He wrote a book called Genghis Khan of the Making of the Modern World. He's written a lot of books, but this is the one that really, I suppose, commercially at least, has been by far the most successful. It's potentially up to 1 million copies plus.
Wow.
So he was a academic anthropologist, I forget which university, but American university, and he's about 50 years old, a little bit older, in fact, and then the Berlin Wall falls, and he wanted to write a book about the Silk Road. So he goes into the former Soviet Union, and as he's doing his research for this book, he sort of discovers, there's this great man of history, Genghis Khan, who himself, Genghis Khan, did not leave Mongolia, where ethnically Mongolians lived, until he was in his 50s. The real hard stuff of his life was unifying the nomadic tribes before he even left his own geographical boundaries. Wow. And then he goes down to history as the greatest conqueror of all time. But Jack Weatherford himself, right, he wrote this book in a second career, which will be what he's remembered for after his 50s. And it's, anyway, maybe because I really romanticize that about Jack is why I picked it up in your book and in sort of inflections you've had in various interviews.
Yeah, I love that theme. There's also a theme that you can accomplish a lot in life, but if you blow it, you have some scandal late in life, or you do blow up your firm late in life, that's what you're remembered for as well. No one remembers all those years of accomplishment. So there's a danger there as well.
Did you ever get to interview Nassim Taleb for the book?
I did talk to Nassim Taleb, yes.
Where does his worldview leak into The Man Who Sold the Market?
I do not think it does. Nassim Taleb's worldview lately has been one that I'm very uncomfortable with.
Okay.
Yes, not
because of what he's saying about Israel-Palestine, or because of But can you remove that?
No, I can. Sorry. No.
Because he's a consequential figure in the world that you're writing.
Yeah. No, I'm being dismissive unnecessarily so. Listen, I did talk to him. I talked to him a little bit for the book. Not didn't spend a lot of time. I've talked to him subsequently a little bit. But right, I never his worldview. Yeah, you could argue. I have to think about it.
Okay, no worries. Maybe this question will jog some type of thread. But
Yeah,
would you agree with this assertion that Universa, Spitznagel's fund, but which Taleb is, famously a consultant for, at least, I don't know if he still is, but he certainly was at one stage. Your great colleague Scott Patterson wrote, The Chaos Kings, which explores this very well. But would you say that Universa is on the other side of the RenTech coin? RenTech say that they figured it out and they can predict the short-term future more than 50% of the time. This is where their wealth comes from. And meanwhile, Universa, they don't even try to predict the future. They're just exposing themselves time after time to the wild upside of the unexpected.
I like that observation. I like that analysis. You can make that argument. That's not a bad argument to make. A strong argument, yeah.
Okay, but give me a little bit more than that, Greg. I can't just be like leading questions here or anything like that, although obviously they are, but...
Include your own thoughts in this segment, and people can learn from you as well. Listen, the Renaissance team, they don't presume to have confidence in where the world is going, where investments are going, to market neutral funds. They don't even know if their trades are going to work more than like 50.1% of the time is the way it was explained to me. So I don't think one can view them as some firm that believes that one can determine the future. And frankly, one observation from my book that people have had is, well, geez, there's a lot of alpha out there. There's a lot of way to outperform. It's an inefficient market. I didn't take that at all. I kind of came away from my book and the research thinking it's a pretty efficient market. Yeah, these guys have done really, really well time and time again, but they've capped their funds at a certain size. They can't get too big because then it will hurt the return. So that suggests there isn't that much inefficiency out there. And in terms of predicting the future, they get it right only, just over 50% of the time. They're really good at levering it up and knowing when to put on lever, and that helps their returns too. But I don't think they're opposite sides of the spectrum, the Universa guys and the Renaissance guys. They do have very different approaches, though.
Could you actually explain that point a little bit more? Why their fund, it will hurt their returns if they sort of keep growing in size? You talk about slippage in the book and stuff, but admittedly, I never really understood exactly why that would be the case.
Well, there's the simple observation that the bigger any fund gets, the harder it is to perform. And I've seen it time and time again in my coverage at the Wall Street Journal and my books. I mean, I wrote the book about this guy, John Paulson, who made the greatest trade ever, made $20 billion over 2 years, 2007 and 2008. And what did he do afterwards? He grew his fund to like $36 billion. And then his results subsequently were really disappointing. And it's because of that. So when you get too big, and it happens over and over again.
But is that because as you're growing big, you need to be placing more bets? And so just odds are you're not going to be as consistent with a larger pool of bets than you might be with the smallest pool? Or is there something deeper that I'm missing?
It's no more deeper than the fact that there's just a certain amount of inefficiency in the market and alpha and opportunity and ways to make money. So you've got 10 signals that work time and time again, but then you add and they're going to be your 10th best. The 10 best, you determine these are the 10 best. They work, they're consistent, they're reliable. But you're saying, oh, you're going to double the money I manage. Well, I got to start using my 11th, 12th, 13th, or 20th best signals. They're not as good. And proof is in the pudding. When Renaissance started these outside funds, their strategies were a little bit different, but still they got really big and the results were not very good. So as you get bigger, you've got to start incorporating signals, trading strategies that just aren't your ideal ones.
But then why can't you just double and triple down on your 10 best signals?
Because even they are limited. Even your best signals don't give you unlimited gains. They have certain amounts of returns possible. Let's say the markets are relatively illiquid, commodities, currencies, fixed income. They do some trading there. You can't make that much, can't put that much size in a lot of those areas. And even in equities, there's just so much money you can put in some of these shares and without moving the prices. There's this danger you have of putting on the trade at the wrong time. And they're very, very good at this slippage, and they call it the devil, and the impact on the market. But if you have too much money, managing much too much money, you push prices around.
Greg, just one or two more on RenTech, and then I'd love to ask you some journalism questions, but we'll see how quickly we can get through them.
Sure.
A detail from the Acquired episode was that the boys made this observation that a lot of these professors in mathematics and so forth, they might not even be able to read a balance sheet. Do you think that's a little bit too hyperbolic, or could it really be the case that these guys managing billions and billions of dollars in and out of the market every single day, they didn't even need the crash course in fundamentals?
The Renaissance team doesn't want to know much about finance. I mean, I've got an anecdote in my book where Bob Mercer, who was the co-CEO at the time, didn't even realize that Chrysler wasn't a stock anymore. They had been acquired. And in a presentation, he talks about Chrysler this, Chrysler that. And then his staff is like, Bob, it's not even a stock anymore. And at one point, they kind of talked. He said something about he'd rather there be no names for stocks, just be numbers. So yeah, that underscores the whole paradox here. These are individuals, mathematicians, scientists, who don't even have any curiosity, or I don't want to generalize, many of them don't have a curiosity about business and economics, so balance sheets. No. Listen, will they analyze balance sheets to the extent that they see it helps them in terms of developing patterns and signals? Yeah, but they don't really have inherent interest like you and I might in a balance sheet and a company and its growth. Some do on a personal level, but a lot don't.
What's Bob Mercer doing these days? He was a massive, massive conservative donor.
Yeah, he got burned by all the attention surrounding 2016, and he really helped put Donald Trump in office. And there was a backlash at the firm, which I write about. I mean, my book is really about how they made all this money, but how it split them apart at one point. So he's a very secretive, kind of quiet, introverted guy. So he didn't enjoy that experience. He's pulled back a lot, and then he ended up stepping down to be just a researcher there, stepping down from co-CEO because the morale was so bad. I write about that in the book. So he just kind of pulled back, and then he left the firm even. I think he's up in New Hampshire, I'm told, somewhere. I'm not sure what he's doing, frankly. If someone out there is listening would let me know, I'd love to know.
Do you think it's just our sort of modern political environment that creates giant problems? If one person is so radically on the right and their colleagues so radically on the left, you can't sort of just move past your political differences to the point where a guy like Bob Mercer, who's, at the top of the world, he clearly has this feeling about where the country's going and his politics, etc. But because of all the hate he would have gotten from it, he's retired, I guess.
Yeah, well, I think some people at the firm and elsewhere are able to get past that. Jim, for example, he always liked Bob, and he was fine with him and his political views. They had very distinct political views, very disparate ones. But remember, Jim loved money, so Bob Mercer was helping make a lot of money. But it's also the case, we have to acknowledge that these are not normal times anymore. These are not normal candidates. At the time, people had these real concerns, and many do today, about
totally.
He was leading the country.
Right, so it's potentially way more consequential than just, a political difference. Do you notice that a lot because you've, at this point, thousands of firms, really taken a deep dive on? Do you notice that political differences rephrase the question, how often do you find that political differences become the downfall?
I've not found that. Wall Street is still, to some extent, driven by P&L and profits and losses, how much you're making, returns, etc. Still meritocracy. There's a push away from DEI lately. So I haven't found that. It's usually personalities, wealthy people who are jealous that others at the firm are a little wealthier. That happens a lot. And just not being able to keep up with the market. That usually leads to demise of these firms.
So I think, correct me if I'm wrong, but D.E. Shaw sort of came out of RenTech at one stage.
Hmm.
Yep. And then,
No, they were. I'm sorry, distinct. I mean, you can trace some connections, but no, they were doing their own thing.
okay. But D.E. Shaw, Jane Street, Citibank, they are all doing as much, there are departments within those companies that look as much like RenTech as they could possibly make it. Is that a fair assessment?
Some of these places have pockets where they do this medium term, not high frequency, medium frequency trading, PDT, a little bit of Two Sigma, a few hedge funds here and there, not as many as you would think.
But the reason for me asking the question, and forgive me because I know this is something you probably had to answer a million times, but I just wanted to get my chance to ask you myself, having seen that these firms can identify from the outside what a strategy looks like, hire the just pure academic, most brilliant people that you can possibly find, buy the best possible data in the world, give them anything money can buy. And then why can they not perform anywhere close to what the Medallion Fund is doing?
It's a great question. I'll give you a few of my theses about that. One is that one of the advantages Renaissance has always had is got one model, one trading model. Everything, every signal, every discovery is put into this one system, and nobody else does that. So you say to yourself, well, why don't they? At this point, it's too late. If you're, I don't know, D.E. Shaw, you've got different siloed, different groups, different approaches, different people making money their own way. There's no way you're going to clear all that out and have everybody do one model. And none of these firms are going to start doing that. Could they start from scratch? Yeah, but how are you going to start from scratch and compete against Renaissance? Nah. So that from the get-go was one of their discoveries or one of their approaches that has worked out really well. So that's one explanation. And then the other is, yes, there's talent everywhere. And you go to Wall Street and you get a tour and people point out that's our PhD, those are our PhD. Renaissance isn't just PhDs. And yeah, it's a third of the firm or whatever, half the firm are PhDs. These are people that led departments at major universities. So it's a whole nother level. They don't even think of themselves as competing with Wall Street for talent. They see themselves as competing with Silicon Valley to some extent.
Mm-hmm.
So yeah, there are a lot of smart people out there, and they're not that much smarter at Renaissance, but I think they are a little more.
But they still have that very marginal edge on the intellect and what they think. So. Well, this kind of complements that point a little bit. I asked you before we started if you saw the Willow chip news today. You haven't. I'm not going to pretend like I know what it is, but it's got something to do with quantum computing, which basically just makes computers the demo they showed was absolutely unreal. But
wow, I got to look at that.
Exponentially more powerful, basically.
Wow.
And so the question was, does this computing tech, would it help a firm like RenTech, which is in other words asking how much of RenTech is their tools and their data versus the minds using them?
So I haven't asked them about quantum computing. I've asked them about AI and the breakthroughs lately or the advances in machine learning and such. And listen, Renaissance is the pioneer. They were doing machine learning in the 1980s. So it's part of the reason I wrote this book. But they still, this is as of a year ago. I don't know if they've changed since then. And the people I've talked to, it's hard to get in touch with these. It's quite secretive. It's like checking in with your spy behind the lines in some foreign country kind of thing. You don't want to do it too much either.
Right.
You don't want to get them in trouble and outed, as it were. But the last I heard from my people, they were still of the view that you can't turn all the decisions and all the operations over to the machines. They were of the view that it should still be machine plus man. I was about to say man plus machine, but they don't believe that. They do believe it's man plus machine. So there's still a role for these PhDs, and they're not ready to turn that whole system over yet. But in terms of quantum computing and such, I haven't asked them about that.
No worries, mates. Okay, so just give me a wave of the hand or something if you really need to leave. But there were a couple of questions I wanted to ask you, more about you and a little bit about journalism. To the point you just made, it's hard to get in touch with these guys. How much of your work is sales? How much are you figuring out how to get in touch with them, composing a compelling email, following up 20 different times, attacking them from different angles?
Good question. So like anybody's job, there's a lot of sales involved. And so I teach a course, little class, whatever, to young journalists, either they're interns or they're young journalists here, or sometimes students come by. And one of the points I make to them is some of the most simple, obvious things or seemingly obvious habits one needs to remember. Just being polite to people, just be polite and appreciative, and just kind of write an email afterwards. Thank you. It was great talking to you. It was interesting. And just being, because I don't think it's sales, but in my world, a lot of it is showing enthusiasm and talking to someone. There's this great YouTube session years ago I saw. It was 4 of the best comedians sitting around talking. It was like Louis C.K. before he was discredited, Chris Rock, Jerry Seinfeld, maybe Larry David, somebody else. And I think it was Larry David says something about how when they get interviewed, when Larry David says, whenever I get interviewed, the journalist or often has like a list of questions. And as opposed to having it make it be a conversation, and you need to have that conversation. So a lot of it is just sort of showing enthusiasm and being interested in the subject matter. And I'm lucky in that I actually find the subject matter interesting. Most financial journalists don't. Most financial journalists got into financial journalism because their jobs here, they're better paid than in other kinds of areas of journalism. And good for them. I'm not, and they're probably better writers than I am, and they super smart, maybe with better schools. But one of my only advantages is that I'm actually interested in the subject matter. I find it fascinating. So that's helped me. I'm not even sure what your original question was. I'm sorry to kind of...
No, you totally answered it. It was asking about sales and turned into the personability, the enthusiasm, because obviously humans are so good at detecting BS. And so enthusiasm is incredibly hard to fake. Obviously, you have to be psychopathic, right, to genuinely fake enthusiasm to the point where the other person believes you. But to turn that Larry David point around onto you, you're interviewing thousands of people, in your career. What do you feel like when you're interviewed? What are the interviews that stand out? Not to get too meta.
I always a little bit uncomfortable because let's say at a barbecue or something, a bar mitzvah or whatever, my wife will always tease me that I'll sit down next to somebody and just give them question after question. It could be annoying to some people. Other people probably enjoy it. I'm not sure. But I'm genuinely interested. Like, I think everyone's got a really interesting life story. Like, give me, 20 minutes with you, and I bet you I'm going to uncover some really interesting things. And I don't care who it is. A dentist, an accountant. I'm sure they've had some challenge. I'm sure they've had some obstacle in their life, be it health, be it family, career. I mean, I know myself. I mean, I was almost fired here years ago for various reasons. The whole embezzling thing probably wasn't a smart idea. Just kidding. But yeah. So yeah, right. So I'm of the belief that that people are interesting. So I'm inherently a little bit uncomfortable talking about myself. It's just not, and that's part of the reason why I went into this industry, because I like asking questions and I'm curious about other people. And yeah, I just kind of find it boring talking about myself to some extent. Well, you get past that. And if I can share some lessons with people, I really enjoy that. So teaching is partly taps into that impulse. So I'm open to that. My father was a teacher. My brother's a teacher, professor. So I get that.
So enthusiasm, authenticity, genuine interest, these things drive a camaraderie and potentially they'll open up to you, etc. But what about just the perfectly crafted question? Do you think about that? Is there a way I could combine the right words here to get them to say exactly what I want to hear?
Probably is, but I'm spending my life's pursuit is of that question. So listen, a lot of what I do is different from what others do. I've got to piece together information, be it a book, be it an investigative article, and I got to make sure it's accurate. And it helps being at the Wall Street Journal because there's always that element of, do I want to see this in the paper? And I want it to be inaccurate in the paper. And I take advantage of my tools. Everyone's got to take advantage of their tools. And you know what? You listen to the newsroom and everybody does it their own way. Everybody, man, woman, Is it a connection you've got? Something, some commonality. I like to find some commonality. You can always find something. I wrote a book about the fracking business called The Frackers, and I went out to talk to this guy, George Mitchell. And George Mitchell was this oil baron who is the grandfather or the father of fracking and changed this whole country. And I didn't really know much about energy, and I didn't really have much in common with him. He's in Houston, and I'm like, how am I gonna connect with this guy? And then he told me his story, and he's a son of a Greek immigrant who changed his last name. Savas Paraskopopoulos was his father's name. And at Ellis Island, so he has a great story about how his father was building the railroads from Arkansas to Texas, and his paymaster came to him one day all unhappy. He's like, Paraskopopoulos, I can't spell this. What's with this name? And the Savas Paraskopopoulos is like, well, what's your name? My name's Mike Mitchell. So Savas said, all right, I'll take that name. That'll be my new name, Mike Mitchell, his paymaster's name. And my grandfather got off the boat, and they said, what's your name? And he said, Rumshinsky is our last name. And they're like, can't spell that. Take the last guy. It was Zuckerman. And it could have been Smith or O'Brien or something. But I found a connection, and we both had that connection. So I'm a big believer that you got to find that connections to people in general, not just when you're interviewing them, but in life.
No, totally. That's an incredible anecdote. Is it Russian or Polish?
It's Polish, yeah.
I got my questions out of line here, Greg. Please bear with me if you don't mind. But I just wanted to round out the RenTech. What is the most important questions about RenTech that people never ask you?
I just find too many people are focused on what the right formula is. What's the secret sauce? And either I'm a really bad reporter and I never discovered it, but I've talked to dozens and dozens and dozens of people that work there, and I don't think they're all lying to me or misleading me. And they all say, Greg, that's just a silly approach and way to understand it. There's no one signal. We've got so many signals. There's no one that's produced all this money. There's some that are very reliable, and we're not going to tell you that have worked for a long time, but they may degrade tomorrow. And by the time you write this, it won't be valid anymore. So they've discouraged me from asking that question. And so I get that question a lot, and for good reason, I mean, the only question that doesn't get discussed enough is the management of the firm. And I really, after I wrote the book, I realized it's as much a management book as it is a trading, investing, because they're just a fascinating, interesting organization and how they're put together. And I don't think people emphasize that enough.
Also, in some sense, I don't know, this may change the more experiences I have, but I kind of have the feeling that some people just sort of have it, and it can't necessarily be taught. Great people management, actually having authority, being able to admit when you're wrong, but still maintain some type of authority and move pieces around on a board and people and make people happy. I don't know if that'll change over time. But all right, so you were always keen on finance. You tried working on Wall Street from several angles, and you ended up applying to an open position as a financial reporter. And a part of that application, you had to write a mock piece that you submit. And you said in an interview how it was just pure fun. You couldn't believe that this would be a job. So it was joy in a sense. Now, I wanted to ask you, do you still have that joy for journalism, or has declining business models and a falling status of journalism sort of soured that pure joy over time?
So in some ways, I'm embarrassed to say that I still love being a reporter.
Why is that embarrassing?
Just because there's no growth there, and others have gone on to be editors or other kind of things or left the industry. I find it endlessly fascinating just because every day there's something new. So right now I'm looking into Bitcoin and Michael Saylor and MicroStrategy and the levered ETFs. I don't know. Tomorrow will be something else. So it changes every day. I'm a curious guy by nature. I like talking to smart people. I'm not necessarily the smartest guy, but I am a curious guy. So I'm privileged. These people will pick up the phone to talk to me, groundbreaking investors and traders and others who move markets and move finance and move the country. I'm just I'm grateful, and I'm very lucky in a lot of ways. So if I won the lottery tomorrow, my wife always says I'd come into the office or fire up the computer, at least from home. I work from home, but I'd still be working.
But you have a really high status at one of the highest status publications in the world. how do you see the media landscape changing over the next 20 years? And is there any solution to a sort of declining business model that is the type of journalism you work with?
Well, if you think about it for a moment, I mean, I make my career writing longer pieces usually. I mean, my books and such, and even here, it's mind-boggling. Like in 2024, close to 2025, I still get paid for that. I'm grateful and I'm lucky and I'm fortunate. But man, will people still be reading books in 10 years? And young people, it's hard to get them off Instagram. They're going to read a 100,000 word. I mean, I'm writing a new book right now. Part of me wonders, are really people going to read 100,000 words? Now, book sales have held up nicely, I have to say, in generally, in the industry. But I'm worried about the future. Yeah, I'm definitely worried about the future. In terms of the media world, it's harder because we're relatively stable at the Wall Street Journal. So that's good, but I see the landmines everywhere else, and people step on them and going down, and my colleagues elsewhere and other publications. And again, the attention span is shorter than ever, and also it's just harder. It's just a disparate world where you kind of have to build your own brand. And I'm a little comfortable doing that, putting a lot of effort into it, not just because, yeah, I could go on TikTok and hawk, or I could pick up the phone and ask a really interesting, smart person some curious questions. I would rather do the latter, but I kind of need to do more of the building of the brand if I want people to read my long pieces in 5-10 years. And I would love to keep doing this. So I am wary and anxious about the future, but we are relatively stable at the Wall Street Journal. So it's a miracle.
But if a lot of the great media we're consuming in 10, 15 years comes from individual content creators, what are the consequences to what that is, to what the final product is that's being published when it doesn't go through the mechanisms of editors, you having a salary to sort of actually do it really well? This is more what I'm getting at. As someone in media, how do you see the media landscape changing, really consequentially, after you've observed these changes, the landmines around the Wall Street Journal? Maybe you have to build a bigger personal brand to have some type of staying power down the line to still do the work you love. What are the consequences of that?
Yeah, Ryan, it's going to be a dangerous, perilous world. I am worried about it because you need those editors that are not in the public eye and don't get a lot of attention necessarily. Their names aren't in the paper, but I'm not surprised. I mean, maybe if your audience would be surprised how many times they'll find a mistake. They'll see a word that's choice that innocently I chose for a good reason, but it can be viewed in a certain way, and it's just either wrong, it's defamatory, it's not appropriate. And again, I didn't mean it to be as such. And editors are really important, different sets of eyes, people who care about the meaning of every word. We slave over every single word in our pieces. And if we're going to get into a world, and we are moving in that direction, where people are on their own, just kind of firing off thoughts or observations or things they've heard that haven't been checked, aren't accurate, that's dangerous territory for people to be relying on that kind of information flow. And also, it's also the case that it creates incentives. It creates incentives. People want to grab attention. So the louder you are, the more controversial you are, that's going to be more important. You're going to stand out in that way as opposed
the faster you are confirming.
Well, I'm sorry?
The faster you are before confirming.
Yep. Yeah. So that does worry me. Yeah. And I am grateful. I look around this newsroom at the Wall Street Journal and there are people there still whose job it is to make sure guys like me don't make dumb mistakes. So I'm grateful for that.
And is it just monthly subscriptions that is the journal's income, and advertising on podcasts?
So it used to be the case. I've been here since 1996. It used to be the case that I think maybe 50-60% of our revenue was from advertising, and now it's got to be 10%, maybe even less. And so it's all subscriptions. Yeah, I don't know, monthly subscriptions, but it's all subscriptions. We get a little bit of other kinds of revenue. So Yeah, people are still paying to read us. The danger, the catch is that it's just harder to get their attention nowadays. Google searches, we used to get a lot of traffic from Google searches, and that's dried up for everybody. Nobody gets their eyeballs and traction from Google anymore, and that presents all kinds of new problems.
Totally. How do you like this for a sort of worrying anecdote? 60% of your income back in the day was from advertising. You could sort of cynically say that you are sort of in the service of the advertisers, but you could someone could easily sort of read past that and be like, okay, no, it's not. This is just how they make money. But then when 90% of your income is on subscriptions, and you see someone like the Washington Post, that's Bezos's paper, right? Not endorse a president and then lose 250,000 subscribers. That's an insane amount of revenue. And then combine it with this anecdote. I interviewed a huge Substacker, and we were sort of talking off air about it, and he's felt this experience with a couple of his mates who also have giant Substacks, some of them political. When they write a piece bashing Trump, they get more revenue. They get more people subscribing. And then everything else they write barely moves the needle at all. And then they'll write something not pro-Trump, but not bashing Trump, and then he starts losing subscribers. So you got the Washington Post anecdote, you got this Substack anecdote, and the declining business model moving towards subscriptions on the surface seems like, okay, that's way more sustainable. This is way better. But actually what it might be doing is further drawing people down, only consuming the things they want to see, never, ever consuming the things that they don't want to see.
It's a huge, huge problem for society. People are in these bubbles, information bubbles. They read that which they choose to read and listen to and watch and hear people with similar opinions more than ever. And people talk about pushing themselves to be exposed to others, but it's hard to do. Now, listen, there aren't many papers like ours where we try to play it down the middle. We try our best on the news side, not on the editorial side. But I'm petrified about the future of a society where people aren't exposed to opinions other than that which they already agree with. There's a guy, I once wrote a piece about this guy, David Rosenberg, and he has been a bear on Wall Street for many, many years. And then one day he became more bullish, and he told me he got these angry emails, similar to what you were suggesting, and he was just taken aback by these are people that subscribe to him and then like him and have been loyal to him. And he came to the view that they weren't loyal to him. They were loyal to a viewpoint. They were loyal to this bearish viewpoint. And they just wanted to hear, they've already had determined that they had a perspective and they wanted someone to share that view and give them more support of that view. And it's just, it's troublesome. It's troublesome.
A very cheap psychological observation one could make there is this comfort in the tribalism. Basically, I want to feel like I'm staying informed, so I'm going to keep reading the news and I'm going to stay on top of everything that's happening around the world. And if something strikes me, I'm going to really enjoy it. But just wanted to reaffirm what I think, what I know. I don't know if there is no question under that or whether it's even an observation worth making. No.
Well, the other point I was going to make is that it is a new world in that there's much more anger targeted towards us in the media. There's also more appreciation. So I think half this world appreciates us maybe a little bit more than in the past, perhaps. But yeah, I never got the kinds of emails and passion that we've received in the past few years. And it's not just sort of oddball readers. They're mainstream kinds of people. There's a big money manager named Jeff Gundlach, who I wrote about. This is already at this point a good 5+ years ago, but I just wrote about how he was on a roll for a long time and now he wasn't. The numbers were the numbers. It was pretty obvious theme. Wasn't a great leap on my part. And he got so angry that he goes on this conference call with his clients, thousands and thousands of people, and he referred to me, he said, Mother Zucker, that Mother Zucker.
That's clever.
I kind of appreciate it.
Yeah.
But years ago, you wouldn't do that. You just deal with the criticism. It's not even criticism, just an obvious story to be written. So yeah, this is a new world we're living in.
Yeah. Okay. Greg, you've been so generous with your time. I really
Sure.
do appreciate it. Last
Excellent.
question for you. I suppose it's kind of double-sided, which I suppose is not a good way to ask a question, but I ask as many guests as possible, what is the role that serendipity has played in their life? So I definitely want to present that to you, but then as well specifically, after publishing The Man Who Solved the Market, what type of serendipity did that invite into your life?
So serendipity in general, I saw an ad in the newspaper for newspapers back then had ads, and they had jobs available to be a financial reporter. I never considered being a financial reporter or being a reporter. It didn't cross my mind. So I was just kind of skimming that paper that day, and then I fell into the job, my career, that what I was meant to do. So it's all due to serendipity to some extent. There, it didn't even cross my mind to be a financial journalist. I was like finance. I was like writing, but I never thought of putting them together. And in terms of the man who solved the market, I'm not sure it's serendipity, but I went to Jim's funeral. I had second thoughts whether I should go or not as a journalist. I didn't want to make anyone uncomfortable.
Mm.
Everyone there was happy with the fact that I wrote the book, in his family and such. So then I went, and then I heard there was the Shiva, Jewish tradition. You go afterwards, it's a little bit of like a wake kind of thing where you sit around with the family. So I also thought there, should I go? I didn't want to make anyone uncomfortable, but I wanted to pay my respects. He was a special man and played a big role in my life, actually. I spent years thinking about him, involved in him. So I thought I should pay my respects by going. So I went and I met his widow, and and I was really uncomfortable with her. But I just said I just want to say hi and pay my respects and tell you what a special man he was and how I enjoyed meeting with him, spending time with him. And she really liked the book, but she also liked it. I did an obituary about Jim for the Wall Street Journal, and then she asked me to speak, and I was just like floored. I spoke at Jim Simon's Shiva, and that was to like top mathematicians and family members and children and ex-wife and wife, and I was like, wow, to speak at Jim Simon's, it was an honor. It was frankly not really, probably shouldn't be saying that as a journalist, I'm supposed to be dev and not have any emotion whatsoever, and not supposed to like the people I write about. But he's a likable guy, and he did good for the world. He was very charitable in the end. And anyway, I got to speak about Jim at his Shiva. It was real. I feel honored.
Totally. Let's leave it on this then. As an ode to Jim Simons, what is your favorite memory or anecdote that you had with him?
Me personally with him, or the one I've written?
No, you. Whatever comes to mind right now, having just told the story about speaking at his Shiva.
I just can't stop thinking about how I would spend hours with him in his office, dealing with the smoke, dealing with cigarette smoke in my face. And he wasn't apologizing or anything, and I just got to deal with it. That's part of the deal, You interview Jim Simons, you get smoke in your face, and the fun, the humor, and the intellect, and he was crafty and coy and didn't want to share too much, and he was probably playing games. It was strategic in some ways, a little bit of a chess match to some extent. I was trying to get as much possible out of him, and he knew that. And then he said to me, just a few months before the book came out, our last meeting together, he said, "Greg, I really don't want you to write this book." I was like, "Jim, the book's at the printer right now." Sorry, I apologize, but the book's at the printer. Like, just make sure to get it as accurate as possible.
Mm-hmm. Amazing. Well, Greg, thank you so much again for your time, mate. Super generous of you.
This was fun. You asked a lot of questions I hadn't been asked before, so I give you credit for that.
Well, amazing. That means a lot coming from you.
Sure. And I've done a lot of interviews, yeah.
Cheers, Greg.
All right. You